As a continuation of the discussion that we had in Fundamentals of ABM 1 last Tuesday, we now have the remaining two items in the adjusting entries. I'm referring to accrued expenses or accrued liabilities and accrued income or accrued assets. We already had the three other adjusting entries: depreciation, deferred expenses or prepaid expenses, and deferred income or unearned income. This time we'll start the afternoon with accrued expenses or accrued liabilities. I'll share the screen to you because there is a sample situation found in this problem. So Nathan, Nicole, I hope you can see this. Accrued expenses or accrued liabilities are items or of expenses that have not been incurred, that have been incurred but have not been recorded and paid. So it's of course possible that when it comes to expenses, the company receives a bill, but that expense has not been paid yet. Take for instance this example. On Feb 29, Matapang received the electric bill for the month of February, and that bill amounted to 3,800 pesos. Matapang will pay this bill on March 2016. So what will be recognized on Feb 29? Take note, as recording would demand for it, something has already been identified on Feb 29. What is that? There is an expense. What is the expense? Electricity expense. Because there is an electric bill that has been received on Feb 29. However, the bill has not been settled on the same day, as it is to be settled on March 2016. So how will you record this one? This is the journal entry. Look, Feb 29, debit is utilities expense. They'll identify electricity under utilities. Again, they identified electricity under utilities of 3,800, while a credit of utilities payable has been acknowledged on the same day. How will this be closed? Take note of, this is on Feb 29, 2016. What if came the month of March, let's assume, March 3, 2016. The bill for electricity has been paid. What will be your journal entry? Nathan. Again, the transaction is the bill for electricity has been paid. What will be your journal entries?
Has been paid. Utilities expense.
Take note, you have already recognized utilities expense on Feb 29. Will you still recognize that on March 3? Nicole, what will you do? What will you acknowledge for debit on March 3?
So,
Utilities payable, sir.
Correct. Utilities payable. And on credit, what will you put, Nathan?
cash.
Cash, correct. On March 3, you will not anymore indicate a utilities expense because the expense has already been identified on Feb 29. It's just that the expense is recognized with a utilities payable on credit because the company has not paid it yet at that month. Then came March 3, where there was already a settling of the payable. So what is the normal balance of a payable, debit or credit? Nathan?
Credit.
Credit. To settle a payable, you debit it. And the manner of settling the payable is through cash. That is why you credit cash. That's on a March 3 transaction. Questions regarding accrued liabilities or accrued expenses? If there's none, we proceed with accrued income or accrued assets. These are income items that have been earned but have not been recorded and paid by the customer. Take note, income that's already earned but has not been paid yet by the customer. Not recorded and paid by the customer. For instance, you have here a sample. On Feb 28, Matapang repaired the computer of Pedro for 15,000. Pedro was on an out-of-town trip, so he could not pay Matapang. He told Matapang that he will pay for their services on March 1. So what did Matapang recognize on Feb 29? Look at the journal entries. Accounts receivable. Debit, and on credit you have service income. Why is it recognized as accounts receivable? Because there is already a recognition of an amount to be received as a record of service income. But cash is not received on this day. Has cash been received? Not yet, because accordingly, Pedro was on an out-of-town trip. So let's assume, let's continue, let's bring this further. What if Pedro came back on March 12? So what happened was, on March 12, Matapang received the cash that he was supposed to receive from Feb 28. Again, Matapang received the cash that he was supposed to receive last Feb 28. What will you put on debit, Nicole?
Cash.
Cash, correct. What will you put on credit, Nathan?
Accounts receivable.
Correct. Accounts receivable. By crediting accounts receivable on March, what's the date? What's that date? March 12, March 15. What's the date that I mentioned? March. Nathan, Nicole, what's the date that I mentioned? March 12?
12 ata to? Or
By receiving cash on March 12, you will then reduce the amounts of receivables. Because cash has now been received by the company. And that was in recognition of the transaction that happened on Feb 12. That's accrued income or accrued assets. After that step, you are now ready to present the adjusting entries. Look, this is the worksheet that we're talking about. There is a column. I hope you can both see it. There is a column for the unadjusted trial balance. So I'm referring to this area. This one. Unadjusted, meaning the adjusting entries have not been reflected yet. Then adjustments were mentioned. And then came the adjusted trial balance. Like for instance, cash remained the same, of course. From the unadjusted trial balance to the adjusted trial balance, cash remained the same. Why is it that we have 30,000 worth of accounts receivable? In the unadjusted trial balance, you have 15,000. Adjustments told you that there's an additional 15,000. That's the total for accounts receivable under the adjusted trial balance is 30. Where did we get the values in the adjustments column? We got them from these transactions. Look, oh. Depreciation, we got that from there. This one, supplies of 2,000, we got that from the adjustments. Unearned service revenue, we got that from the adjustments. Accrued income, accrued liabilities, we got them from the adjustments. Still, the goal is to meet the equality of debit and credit. Look, unadjusted trial balance, 270,000, 270,000. Adjustments total, 31,000 to 31,000. Total of debit and credit, adjusted trial balance, 289,000 is to 289,000. Take note, for a trial balance, we are after of the equality between the debit and a credit. We are not after of the equality between the assets and the sum of the liabilities and owner's equity. We don't do that in the trial balance. We proceed. After that step, we go with the making of the financial statements, where there are actually four. There are four types of financial statements. You have the statement of financial position, also known as the balance sheet. You have the statement of comprehensive comprehensive income, known as the income statement. You have the statement of changes in equity, known as the statement of financial position, known as the statement of equity, and you have a cash flow statement as well. So here's a sample income statement. Please look. You have here service revenue less or to be deducted with expenses, and the expenses are altogether enumerated. Then that would tell you that the income is a profit because expenses are lower than revenue. How do we term it if expenses are higher than revenue, Nathan?
Sir.
If expenses are higher than revenue, what's the result?
Oh, expenses are higher than revenue ko on
Yes,
net loss.
net loss. But if revenue is fortunately higher than expenses, you'll end up with net profit. Okay. Another financial statement. No, I think that's the only financial statement that's here. Then we journalize the closing journal entries. You have the income, expense, and withdrawal accounts are considered, these considered temporary or nominal accounts are to be closed at the end of the accounting period. How do we do the closing? So here are the suggestions. All of the nominal or revenue accounts shall be closed to the income summary account. All nominal revenue accounts. So look, service revenue is close to income summary. That is, of course, one good purpose of closing the per record. One good purpose of closing this nominal revenue account is to also give way to another record of revenue for the following accounting year or period. All expenses as well shall be closed to income summary. And in order to close them, we put them on the side opposite of their respective normal balances. Like for instance, what's the normal balance of service revenue, Nicole? What's the normal balance of
Credit.
credit? To close it, you will debit it. And debiting service
Mm.
revenue in closing it would mean that you should put income summary on credit. In the same way, to close expenses, Nathan, what is the normal balance of all expenses?
Debit.
Debit, correct. To close them, you'll put them on credit. And on debit, you will recognize income summary. In effect, wait, huh? This is the result. Wait, I can't zoom in. In effect, here's the result. Here's the result. Supplies expense brought to zero. Salaries expense brought to zero. Utilities, depreciation, revenue accounts, income summary will be the final record. Income summary will also be close to capital accounts. Look, income summary is placed on debit while matapang capital remains to be on credit, or the capital account remains to be on credit. Please now work on Spencer Company. Have you prepared the journal entries for Spencer Company? Nathan, Nicole? Your instruction there is
Oh, sir.
to prepare the journal entries of those 4 transactions? You look at your module on page
Only
3.
4 cents.
You have those 4 transactions. Go. Journalize those 4. And I'd like to get your answers as well. Gusto mo ko, P.
7 taon. Dapat kumpleto ang sagot na 7 taon. Do not just write 7, dahil pwede 7 araw yan. Pwede 7 buwan. Dapat 7 taon. Ha? Okay, kawalo, makipasa sa sagutin, Angel.
And then I'll share screen to you the answers. Once you're done.
Again? Again? Baranugon. Si Abyang Baranugon. Okay. Abyang Baranugon. Ikalima. Pakibasa at sagutan.
Are you done? Go on, go on.
Sino ba? Character. Yes, Genova. Did you hear Genova?
Let's start with number 1. Let's start with your number 1. Nicole, what did you put on debit, Nicole? Number 1.
Sir, debit,
Debit.
interest on notes payable. Ano, sir? Ito. Cash.
Oh, look, it's an accrued liability. It's an accrued liability. Look at the transaction. Interest on notes payable is accrued. So that's an accrued liability. So what will you put on debit, Nathan?
It's payable.
Debit. Do
Debit.
you debit notes payable right away?
Accounts payable.
Or do you debit accounts payable right away, Nathan?
Wait. Accrued. Wait. Wait.
So, number 10.
Okay, I'll give you the answer. I'll show to you the answer. Look, somewhere here at the bottom part, can you see it? Can you? What's wrong with this? I can't.
What did you answer? Tawid, nasagot mo na inyong ano. Basta yung sagot ninyo. Ha?
Wait. Wait. Can you see this?
Yes, Chelsea.
Look.
Thank you for the very neat answer.
Debit is interest expense. Credit is interest payable.
Dito, natagpuan sa Labaw Lungkol. Tapos sa hanapin. Give me a better answer. Yes, Eliza.
Okay, ha? Interest on notes payable is considered an expense. That's interest expense. However, the expense is identified to be accrued. So you identify it as an interest payable. To accrue interest on note payable through June 30, 2016. That's the explanation. Okay, try now number 2. Fees earned but unbilled. Take note. Fees earned but unbilled. Total 1,400. Go. You make your journal entries. What's your answer, Nathan?
Real answer. Because if you will say, almost say, sa loob ng isang lambak, nakalagay ang lambak na yan, questionnaire. So, kung specific tayo, ito ay nasa pampang malapit sa bahay ng asawa ni Saragnayan. Okay. So, ayan. Write your score if you got perfect. 10 yan. Who got 10? Give me a thumbs up if you got 10.
Nicole, what's your answer?
Okay, so sagot na. Pumunta na tayo.
Hindi ko sure, sir.
Go, go.
Accounts receivable, then service.
Correct. Accounts receivable and service revenue.
Service in revenue.
Or income, service income. Nathan, I hope you got the same answer. Hey, you're just nodding your head. Nathan, I'm giving number 3 to you. Number 3. Nicole, you also do number 3, ha? But you are giving Nathan the task to do number 3. Hey, Nathan is waiting for me to scroll down. He's waiting for me to scroll down so that he could see the answers. Look, Nathan, salaries earned by employees have not been recorded.
Like yung I will tell you kahapon pala yung aking apo sa aking pamangkin. Dinala siya sa Luzon, my sister just dinala siya sa Luzon dahil may bahay doon na siyang nagsagawa para kasi daw 2 times na siya minimatay sa simbahan. 2 times na minimatay sa simbahan ng apo. Tapos, kaedad ninyo actually si Micah.
Answer, Nathan?
Doon sa bahay, tinanong siya
Answer. Accounts receivable of salaries.
Why will you have an accounts receivable?
something like that.
Is there something that the company receives on number 3, Nathan? Or why will you have a receivable? Nicole, what's your answer in number 3, Nicole?
Salaries expense, then accounts payable.
Better term, Nicole, is salaries payable.
Salaries payable.
Why will you better term it as salaries payable? By the way, accounts payable is what you owe to another entity, another company. You don't owe it to another company here, man. You owe it to the employees. It's been given to them, but has not been recorded. So it's just salaries payable. But you got the idea, Nicole, right, of a payable. Nathan, number 4, we give that to you.
Okay, number 4. Ang katusang kolegad ito kayo katusang kolegad maging mag-isip sa nata, yan ang kababalaghan. Kaya hindi naman yan nangyayari sa tunay na buhay.
Nathan, you have bad debts expense for the year is 900.
Pagkasilang, baby, tapos 0 to 6 years old, nag-aral, inside pa, gusto na ngayon. Matatalino, magaganda, at mga gwapo, grade 7, ayan, hindi yan dumaan sa, hindi yan naging binata para hindi naging liyan agad yan, dumaan sa mga baby yan. Mga genius looking na, ay classes lang dalawa. Para ng mga scientist.
Nathan?
Debt expense and debt expense. debt expense and
And
uh,
ah,
accounts.
debt expense, bad debt expense.
Ano, bad debt expense
It's not. How
and
do you read this word, Nathan? How do you read that word?
bad debt
Debt.
expense
Debt.
debt
I
debt
already told you last time not to read that as debt. Debt.
debt bad debt expense
How do you and then how do you end this? What's on credit?
bad debt expense and cash.
Cash? Uy, we learned yesterday in finance, last Tuesday in finance, that depreciation is not a cash flow. Ano, bad debts, depreciations, they are not cash flows.
I no no yes
Depreciations and bad debts are not cash flows. So what will you put on credit?
accounts payable.
Allowance for doubtful accounts.
Oh, baguhan.
No, we had doubtful accounts. You look at number, what adjusting entry is that? I mean, was it not there?
Oh, so
It's not mentioned, no?
dili.
It's not there. Okay. A bad debt, is a portion of the entire collectibles. It's like this. Alright. Whenever you have receivables, some of them or a portion of that might not be collected right away. No matter how trusting you are as a company owner, a portion of that collectible should be acknowledged as doubtful. So we identify that as allowance for doubtful accounts. We deduct allowance for doubtful accounts against accounts receivable. And then bad debt is the amount that has not been, oh my God, that's has really been identified as not collected at that moment, at a particular period. So bad debt expense is the name of the expense. Then we pair that with allowance for doubtful accounts on credit. Questions regarding these four. So for instance, you have a total receivables of 50,000. Then you have identified bad debts to be 12,000. What's the remaining receivables?
3,000.
50,000 total receivables.
50,000. 50,000.
50,000 total receivables. Bad debts, 12. What's the remaining receivables? 38,000. Wow, you still need a calculator. What? Even. Still needed a calculator for that. Let's now go to the second part, the computation of depreciation. What's the depreciation for number one? Depreciation expense. The formula was given to you. How to compute depreciation expense. It's on page
Depreciation.
2. Annual depreciation is equal to acquisition cost minus salvage or residual cost all over useful life. Go, what's the answer? Number one, Nicole.
Wait, sir.
Okay.
Um,
Wait, then photos.
Kababalaghan. May by the way, I don't know if you have seen it in Facebook. Kawawa yung mga asawa ng picture, no?
24.
What's the depreciation cost?
24,000, sir.
Look at the computation.
Mag-asawa na papunta sa paralan.
25,000 minus 10,000 divided by 10 years. Answer is 24,000. Correct. Let's go to number 2.
Meron silang iniwang
What's the depreciation expense for number 2?
So if you will count the age of the 29 to 7,
By the way, please be reminded, number 2 begins with the month of April.
both of them died.
It is with the month of April, not with the month of January. But your computation will still have to be on a 12 months basis.
On the way yung asawa
Oh.
Different from number 1. Well, in number 1, the purchase of the vehicle was on January 1. That is why it's to be computed right away for that year. But in number 2, the vehicle was purchased on April 1 and not on January.
like always
But the computation of the depreciation expense is still to be from January to December 2016.
pwede niya ipakita. Like during my I was just trying to check that
What's the answer?
thank you for those who are making good guesses and so far meron pa rin iba na I can say ito na talaga nag-aral. Okay? Hindi na pumasa.
Nathan, Nicole, what's your answer?
My goodness, my ex every simple.
Wala pa po.
Okay, go.
Kung nag-aral talaga.
By the way, have you arrived already at 24,000?
Pilipino na mahirap na
But 24,000 is not the final answer.
yung karamihan ng mga
24,000 is the annual depreciation, meaning that's the monthly depreciation. It is from January to December. But look, the vehicle was purchased on April. 3 months, for 3 months, the vehicle wasn't there. It came up, it was purchased on April, still on April. So what's the supposed depreciation expense? How many months would that be? April, May, June, July, August, September, October, November, December. 9 months.
180,000.
Depreciation.
Hmm? Oh.
Are you sure about 180,000? It's like this, Nathan. Oh, Nicole. 24,000 times 9 over 12. 9 months over 12 months.
Oh. Solid eh.
Yes.
Video.
So you have 18,000 to cover depreciation from April to December. Again, that depreciation of 24,000 is from January to December. Problem number 2 is plainly talking of April to December. It does not include January, February, and March. That is why it has yet to be the computation has yet to continue. 24,000 times 9 months over 12 months. And that yields 18,000. By the way, for your ST tomorrow, ST on Saturday, but no, Monday of next week, ST Monday of next week, there are no computations yet. There are no computations yet. What you'll have on
Sir, pwede ilagay sa ano to?
again, Nicole. Yes, Nicole.
Sa index, sir.
Never mind. The formula are very simple. That's the only lesson with the depreciation is the only one which has a formula.
Joke. Ayun lang pala.
Yeah. So on Monday, you'll have the first part of the ST, purely theoretical with terms and so on. By next week, by Monday of the major exam week, that's on what week is Monday is that? I'm referring to November 16. On November 16, your ST will have computations of depreciation, computations of and then journal entries on what you'll put on debit and what you'll put on credit. So there are two parts of there are two STs here. Part one is for the theory, part two is the application of the theoretical knowledge. Questions, Nathan and Nicole?
So, huli nila guys, number 5.
Yes.
Please, if there are questions.
That's the last, syempre. So, what is the pattern?
Sa ST, paano nakuha yung mga sagot dun, sir?
Again?
Yung may percent, yung only percent yung given. Sa ST, sir, ano yung business? Binance ata yun?
For what item? I haven't checked. I haven't
Yung
seen your
10%
STs yet.
item.
In business finance?
Yung, ano, sir? Sir, yung may percent